I feel like we haven't heard much about this in the news, but the reality is the home building market has been challenging, to say the least. Good afternoon. So we have housing data as kind of the key focus here this week, although we also will cover a little bit kind of high level as far as an earnings season kind of update, as well as what to expect here next week as we really get into the thick of it. My name is Brandon Steele, financial advisor with Mainsail Financial Group, and our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a bit of the noise along the way. And again, although we'll wrap up with a question of the week around earnings, today's conversation for the core of it is really going to be almost entirely around housing. And there's a few data points that have come out recently that we really want to highlight. We have housing starts, existing home sales, and new home sales. And I'll talk a little about how that's led to pricing as well. But those are really the three data points I want to highlight for the month of September, to be clear. So housing starts was the first data point that we got, and this came out at 1.35 million. So what this measures, if it helps, just to kind of clarify it a little bit, this measures the number of new residential construction projects for that given period. This could be new homes, single family, it could be multifamily, but residential construction projects, right? We also had existing home sales come out. That number was 3.84 million for the month of September, which was a slight downtick from last month. But more important is to note that this has been quite a trend that we've seen with the existing home sales. And these existing home sales numbers have been sliding for quite a bit, which really began as we started to see rates kind of increasing, as a result of the Fed path there a ways back. I think that would have been, spring or so of last year. So it has been an ongoing trend and really, something to pay close attention to. I feel like we haven't heard much about this in the news, but the reality is the home building market has been challenging, to say the least. Right. And this is another data point to highlight that. We also had new home sales come out. That number was 738,000, which actually beat expectations and a pretty big jump. But all in all, again, as we see existing home sales continue to drop, even this tick up didn't necessarily, it's a little more of a drop in the bucket, I guess, maybe a way to put it. So all this leads to increased inventory. And obviously you can sense a bit of a slowdown for quite some time too. However, in general, in the month of September, prices held pretty dang strong. So very interesting to see this, as all forces kind of work against housing at the moment, higher rates, lower home sales, which obviously many of us are in this situation too, where it's really difficult to get out of a mortgage at 2.5% and buy into something at 6%, right? So this has been a continued theme for quite some while, all the while still seeing prices hold pretty strong. So we will, obviously continue to keep you posted on the housing front here as time goes on, but I did want to spend a little bit more time on this as we get closer and closer to the elections to just kind of talk about the housing side of it before things get a little too crazy here in the coming weeks. Coming up, we will be covering consumer sentiment, and it's jobs and inflation week. So we've got a lot going on there next week. In addition to that, we also have a big week in earnings. And so I want to kind of transition into our question of the week, which will be a bit of an earnings update, but also a bit of a heads up on what's to come here next week. So as of last Friday, there was only about 14% of the companies in the S&P that had reported earnings at the time. So take this with a bit of a grain of salt. But at that moment, we had about 79% of those companies report a positive surprise on earnings. And so that's good. But we have seen a number issue more negative guidance moving forward. And what that means is that they're basically reducing their expectations for profits or sales in the quarters or year to come. So very important to kind of keep those two data points in mind as we continue through earnings season. That said, it is still really early, and these trends will be, they're hard to shape a trend after only 14% or so of companies reporting. But as time goes on, obviously we'll have more of a grasp on what's going on. And all of that said, next week earnings are extremely important amongst a number of other companies, of course, but we have Apple, Google, Amazon, Microsoft, all reporting here coming up next week. And those names alone make up, almost a quarter of the S&P 500 because of the way that those stocks are weighted in that index. All right. So the S&P 500 is not just 500 companies all weighted equally in terms of how the index moves. There's actually, it's called price weighted or market weighted index, excuse me, which means that the larger companies make up a much larger percentage of that index. For those who follow, you've heard me talk a lot about this in terms of diversification in the past. But the reason I'm highlighting it in terms of earnings is because although that doesn't sound like a lot of names, the reality is that's almost 25% of the S&P in market cap reporting next week alone, not to mention all the other companies that will be reporting as well. So it will be really important to watch this. Although there's still a lot of companies to report here after next week and in next week, the market weighting of these companies that are reporting earnings are going to be really important to watch in terms of direction of the broader index. So next week's big for sure on the earnings side of it. And I will wrap this all up by mentioning on the earnings piece of all this is just remember as we go further into earnings season, remember that there were really high hopes heading into this kind of earnings season at the end of the year here, and a lot of those expectations had been revised down as we got closer and closer to this earnings season. So remember that beats in terms of earnings are based on those revisions down, right? Keep this in mind as we have more earnings reporting to weigh, because this might still be a great earnings season regardless, but we also want to keep in mind that a beat of earnings is literally, it's just a beat of the expectations coming into that particular earnings report. So remember how that translates in terms of beats and misses and all the things you'll be hearing about heading into this earnings season. But hopefully that helps, and certainly hopefully gives you something to keep in mind heading into next week, where we have so much of the weighted index reporting on the S&P. In the meantime, have a great upcoming weekend, and we'll see you next Thursday at 3.